What's going on YouTube? It's Dave's Daily Trades, back again with an update for AMC. So we just closed the day at $27.95, up just about 0.72%. But that is much better because at one point we were at a low of $26.65, and really the selling felt like it was never going to end. However, guys, I truly see that we have some upside potential to close out the week. Of course, we're going to be breaking that down in today's video, along with the 40% reported short interest. What is going on with that? And also, we're going to be taking a look at the new proposed rule change, the DTC 2021-017. This is some big stuff, guys. And as always, to end off the video, we're going to be taking a look at unusual whales, option activity, and see what's going on behind the scenes. Without further ado, let's roll right into that intro and hop into the technical analysis. And we're back. All right, so let's first take a look at what happened today and what went down. So, of course, we did have some high selling pressure early on in the trading session today, which really just brought us down right away to our low at $26.65. As you can see, I do have this labeled as a spring. This is going to fit into the micro scale accumulation schematic that we talked about yesterday, but once we zoom out, we'll talk about that a little bit more. We came back, retested this area over here right above $27, found some comfort, and decided end of day it was the perfect time to push the price up. And we went from just about $27.05 to our high of $28.20. And this all happened within a 30-minute time frame. Now, we did have a little bit of cooling off period over here, which was totally fine to see, especially after you see a run like that. Absolutely nothing to worry about. Now, some really good things that I want to break down. First of all, the volume. So volume was a little bit low today, which, of course, guys, I think this entire week we really did expect lower volume. And if we do get higher volume, more than let's say 50 to 60 million, then you know what? I'll take it. But I'm going into this week and the rest of this week expecting low-ish volume, but it is what it is. It's a big vacation week. We just got to deal with it. Now, anyways, guys, volume today, we did decrease right around this level over here. Volume was dried out, and that's pretty much what we've seen happen the past, I don't even know now. It feels like weeks. It could be 5-6 days. Again, it is what it is. However, we did get this volume bump going into just about the last hour or two of trading. That was something that we have not seen in quite some time, meaning that AMC still has a freaking heartbeat. So let's zoom out of this 5-minute chart and talk about the micro scale accumulation that's going on in real time. So, of course, yesterday we did briefly discuss this. Of course, this is on the 5-minute time scale. So right here, I do have our PS. And all your PSs is essentially just a stop of the decline in the price action. So we got this stop right over here, and that really establishes the higher end region of your trading range. Now, of course, after your PS, you do still have downside, which is your selling climax. Our selling climax did take place on 12/23, as you can see right here, and established this trend line here, which we did test today, right before our run-up, or just about test right before our run-up today. Anyways, after selling climax, you have your automatic reaction, yet again confirming the higher end of your trading range. After this, followed by sell test in phase B, nothing too crazy. We did get stopped out. We had one wick down, but most of our stops did get put in right here. That's great to see. Now, we do kind of trade around in this range, but overall start to trend down. And as you can see, this trend line was kind of nasty. We did have this false breakout over here on the 28th, so yesterday, but that was early on in pre-market, which really didn't last. And for me personally, I like to see breakouts happen over at least an hour time frame or the 1 day time frame. We didn't get that, of course, and that's why we continued the downtrend. And that brought us to today. So we came down lower than our selling climax and sell test in phase B. So you know what that means. It's a spring. Absolutely clear as day, in my opinion here. We got that spring, which was also followed by some good buying pressure. So we get that spring. We come back into our trading range, which is absolutely key, because if you don't go back into the trading range, well, then you could potentially have more downside potential. Now, the great thing that we saw was your first test here, and then a push up after your test. Now, going in, I do have this labeled as an LPS, which is your lower point of support, for those who are wondering what the hell this stuff means. But anyways, the LPS, this is something I'm still, I guess you could say, discovering. To confirm it is truly an LPS, we need to continue this push up. However, we can get the secondary test, because after this breakout of our trend line, we didn't completely go down and touch this range or retest that trend line before confirming up, which is what I would have liked to see on a technical level. That would have been a perfect kind of breakout confirmation right there. However, we didn't get that. So I'm not ruling out the possibilities that we do come back down, maybe retest the ST in phase B here, and also at this trend line sometime tomorrow morning, before kind of moving up towards your LPS, which will be probably somewhere around that 28.50 mark. So I do think we do need a little bit more time to go on before we can make an ultimate decision of if this is LPS or not. So that's really what I'm looking at for tomorrow. Nonetheless, guys, the big thing, seeing this volume come in end of day, I absolutely loved it. Like I said before, it showed that AMC still has a heartbeat and that we're not over. This is not a dead freaking cat. However, if this doesn't play out on the micro scale time frame, well, we do want to talk about the downside potential. So we do have really good support here at that like $27 range. However, if we do break this, my next line of support would be at this 25, call it like 25.30 range, which does coincide with the first shoulder. And of course, we'll talk about that once we move out a little bit. So breaking down to that level wouldn't be horrendous, because it would confirm our last shoulder before moving up and really just breaking out of this downward consolidation pattern that we've seen for so long. However, I'm a little bit more on the bullish side personally. I do think we either have that test, or this is our LPS and we start moving higher. Really, to see this thing, I guess, get back into the 30s is really the first big step. We do have a little bit of a resistance here at that just about $29 range. But if we can confirm this as support, kind of have this as our SOS phase, I do believe we will break back into the $30 range. But of course, guys, that's what I'm watching, and we will update you guys tomorrow on progress for this. Anyways, we'll jump right into the hour chart, kind of give a little better picture of the larger time scale of where AMC is headed. So as I said, guys, that $25 range would be my bottom support range. So if we can't hold the move that we had today, then yeah, we may dip down, retest here, which would absolutely be perfect before moving back up. Now, do I think we're going to see like $22 or $20 or maybe the teens again? I really don't think so. I mean, I truly believe that this head and shoulders pattern is going to be playing out pretty nicely, and it already is now. I mean, the biggest things that we have to keep into consideration is last week was the week before Christmas, a lot of people taking vacation, and this week is the week before New Year's. Again, lots of people taking vacations, and even if you take a look at the SPY or the NASDAQ, the triple Qs, of course, that's the same thing. But nonetheless, guys, volume has been pretty much dried out everywhere. It is what it is, and hopefully next week we can see that volume come back in. If we get it this week before the end of the week, I'm all in. But what I'm looking for, personally speaking, to really confirm that we are on that next leg up, I do want to see that 200 million plus volume come in. That's when we know we're off to the races and good things are right around the corner. But for right now, we are stuck under $30. Breaking over 30 is really the next step in our journey, in my opinion. Now, enough with the charts. Let's take a look at some of the interesting things going on. So, TD Ameritrade, what are you guys doing? So, a lot of things going on, a lot of kind of misconceptions, and I really think most of it comes from TD Ameritrade. But anyways, Trey Trades, along with various other people in the community, hopped on a phone call and asked them directly what the hell's up. So Trey was actually lucky enough to get through, and he said the licensed specialist just confirmed reported short interest as of 12/15 is 40.25% for AMC. Now, this would be the reported interest of 40.25%. Now, as we all know, per Ortex, per other sources, this is somewhere around 18.2, 18.5%. So this is a pretty large discrepancy if you ask me, and I would hope everyone would agree with that. However, guys, I have seen so many people hop on phone calls who have said the same exact thing with the TD Ameritrade trading specialist or licensed specialist, but also TD Ameritrades, if we take a look at their Twitter, I don't follow them because I don't use them. Trying to look for the tweet now. I probably should have had it pulled up. But they did come out and say that this was an error on their end, yada, yada, yada. And pretty much it's a glitch. But nonetheless, guys, I know, you guys know, even 40% short interest is most likely not even 50% accurate. It's most likely much higher. These systems are glitching all the time. I don't think it's a coincidence. However, a lot of people are going to say, yeah, it's just a coincidence. It's just an error. But AMC has a lot of glitches. So something to keep note of, but also 40.25% short interest. We all know it's much higher. Now, anyways, the DTC came out with a new rule proposal for 2021-017. Now, I do have to shout out Charlie's vids. He just is mind-blowing with all of these articles. I mean, this is 165 pages long, and I want to really just like not read through all this stuff because it is a lot of repetitive information, a lot of just the same shit over and over and over. So Charlie's vid, definitely check him out because he gives a great explanation of what this is. But I'm just going to sum this up in just a few sentences with my notes here. So what this is the DTC has capital requirements for their members, which makes sense. However, those capital requirements have not been changed in over 20 years, which is just absolutely mind-blowing. I mean, you have a changing market structure, a lot of new initiatives such as cryptocurrencies, not just Bitcoin. We're talking about Ethereum, Litecoin. I mean, there's just so many new cryptocurrencies coming out every single day. And then add on top of that, NFT projects, yada, yada, yada. So pretty much the DTC was forced to really just change some of the capital requirements because of the changing environments that are going on within the financial sector. So the proposed rule changes is going to be for capital requirements for U.S. banks and trust companies. This rule also applies to the brokers and dealers themselves. And essentially, to break it down real simple, you are required to have $100 million in equity capital, which is the new requirement. And then if you were a non-U.S. broker-dealer, you are required to have $25 million. On top of this, guys, and I haven't really looked into this too much, but still very interesting stuff, the OCC, which is the Options Clearing Corporation, has a new rule filing coming out, which is going to be put in effect on January 1st, 2022. And it says the following. The maximum aggregate operational loss fee that the OCC would charge clearing members in equal shares in the unlikely event that OCC's shareholders' equity falls below certain thresholds defined by OCC. And essentially, all this is a wind-down plan and recovery plan. So, let's stop and think for a second, because I know this is a lot of boring kind of text, and I know a lot of people disregard these rule filings because they feel like nothing happens with them, and they take forever, which they do. I do have to say and agree with that on. But The big thing is there's lots of capital requirements and protocols coming in for 2022. And you need to ask yourself the question of why. Why is this all being pushed right now? Obviously, we know the answer for this. I personally have believed and still do believe that the DTC, the DTCC, the NSCC, all of these, or the SEC, FINRA, all of these regulatory bodies out there are well aware of the situation that's going on. They, right now, all of these regulatory bodies are preparing for all of this stuff. These rule changes, in my opinion, aren't really meant to change anything. All they're really set out to do is cover their own asses. I mean, this DTC requirement right here, this is to make sure that they don't go bankrupt and they don't go under. And the OCC ruling that just came out, that's also covering their asses, guys. It's not a matter of let's do something. It's more of a matter of let's make sure that we don't get dragged down with these bad, nefarious players out there in the marketplace. So they're coming out with these rule filings, making sure that everything is in place, because when this goes down, it's going to be extremely, extremely messy. You have not just AMC, not just GameStop, you have a basket, a large freaking basket of stocks that are heavily shorted, heavily manipulated, and we probably don't even know what, like 15, 20% of really everything that's included with this. They know how messy this is. All they're doing and all they have been doing is making sure that they can stay afloat and really just weather the storm. So be patient, guys. This, to me, all of these rule filings coming out is very good news. So just taking a quick look before we end the video, or end the recap rather, at the unusual whales options flow. So nothing too crazy coming in. However, I did want to point to this right here. We have a 7:15:22 call option bought at, oops, did not mean to do that, at the strike price of 145. That's some bullish stuff. We're not talking about 50K or 100K. We're talking about $147,000 worth of premiums spent on this play. I love to see these kind of calls, the deep out the money calls with large premiums coming in. However, guys, more of the story, we're still getting puts that are being sold, which means the bottom potentially is in here. We also, all in all, are still getting that bullish inflow even on days where we have that dip. And look, as you can see, the bullish activity for the most part came in during the morning when we were going down. So that's great. Let's take a quick look. We'll jump over here and we're just going to go into this one right here. See AMC's history. So number of calls. This is creeping up, guys. If you remember from yesterday's video, this was right around 50%, 52%. Getting up to 65. I like it. Volume around 72% versus to the bulls. Looking at expirations, that 3/18/22 expiration, that's absolutely been hot. But also you have this 12/31 expiration, pretty hot as well. And this is, of course, just for activity coming in today. Minimum premium over 1,000. Breakdown by strikes. We see $25. We see $28. This was definitely a battle with, I mean, look at today. If we actually jump back into the 5-minute chart, what range were we battling end of day today? That $28 range. That's why I love looking at the options activity. It really paints a very large picture. Now, if we go down, we are starting to get some activity around that $40 strike. We talked about this yesterday, and this is actually increased in open interest at the level. That's great to see, guys. Are we expecting a move? Potentially, guys. Wyckoff is looking good. Volume is, starting to pick up at the end of the day today. If we can start to see volume increase, things are going to look good. But if volume stays this dry, we probably are going to have this overall pattern of either, push up in the morning, down in the day, or push down in the morning, up in the day. And if you want to know what I mean, look at this. This is actually kind of scary, crazy, shows a lot of manipulation, whatever you want to call it here. But look at this. Large wick down, move up, large wick down, move up. Inverse of this. And today, same thing as previous days. I mean, come on now. At least be creative with your fucking patterns. Like, please. But anyways, guys, that's all I have for today's video. Thanks for watching as always, and be sure to tune in for the next one. Peace out.